From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 7, 2017. Today we're going to be taking a look at the NZDUSD, the New Zealand dollar, versus the US dollar for today's trade analysis. We're starting here on the daily time frame. First indicator I want you to look at is the blue trend line. Along the blue trend line, which is a trend line that goes all the way back to January of 2016, so about a year ago, you look at the bottom left, you see the blue circle. That shows us a support low. In the middle of the blue trend line, you see another blue circle, shows us a support low. And then towards the top up here, another blue circle shows us a support low. So we know that it is a significant rising trend line. Now, over the past several months, we go really back to July and August of 2016, you can see the red trend line. You see the falling red trend line, the black circle at the top showing us a resistance high, the black circle in the middle showing us a resistance high. So those are two different trend lines, a rising blue, falling red. Right here where the red circle is, after the market broke back underneath the blue trend line, it came up, touched the red circle, 100 period moving average, and made a new low. Since then, basically since December of last year, we've been on the rise, and once again coming back on the black trend line, on the rise, into that convergence of the blue and the red trend line. Remember, we've seen resistance under here before, right at the red circle. So we know that there's potential of resistance under the blue trend line. It happened at the red circle. We know there's potential resistance into the red trend line, the two black circles. So we're in this convergence of all of the trend lines into the same place. We also have taken Fibonacci of the two black circle highs up here down to the last low at the bottom of the black trend line. That puts Fibonacci squarely into the 73.30.50 level, the pink shaded area, right at the convergence of those trend lines. So some interesting dynamics happening right there. Let's go ahead and zoom it in a couple of times now. Get it back to that current time. So there it is. There's that convergence of trend lines. There's the dashed blue line showing its Fibonacci and the pink shaded area there in between 73.30, 73.50. So all of that coming together to give us maybe a clue that we're looking at a reversal point here for the New Zealand dollar. Over the past week or so, we have actually traded it a couple of times for profit in the live trade room. So the question is, of course, is this a reversal point? Are we going to start to see it go down and change the direction of the trend? Well, over the past 24 hours, we've seen a little bit of a boost for the US dollar, a little fall for the New Zealand dollar. So that's caused it to fall off of that pink zone once again, leaving a candle body that may be giving us another clue of potential reversal. Small red candle with a longer wick on top. Now, we don't know what today will hold and how that candle will look at the end of the day, but isn't that an interesting dynamic where we see the smaller red candle with the longer wick on top often displays characteristics of selling pressure and potential reversal. So we know that the pink zone's a reversal point. So if you're going to sell it, makes sense to sell it as close as possible to that. And you can see over the past 5 days or so, that's been a good idea. Next thing we would look for if we're looking for reversal is a break underneath this orange shaded area. If it can, I think we're looking for further reversal. That would also break one of the Fibonacci levels as well. That would also break the black trend line. And we look for further reversal here. And of course, that would, of course, be in the direction that the market's been going today. Let's go ahead and take it down to the 4-hour time frame because this even shows us a different dynamic. Take a look. I'll zoom it back in. Take a look at our last candle. Big red candle, maybe calling that a bearish engulfing candle. Either way you look at it, I still think there's two simple things that we need to pay attention to and need to watch for today. That would be either a push back to the pink zone to give you lower risk and higher reward. If you were to take a short right now, your stop loss is just above this high up here, above today's high. So if your stop loss is way up here, and let me change that to a red line just because red seems to be better stop color. But that little red line, if that's your stop loss above the pink zone or above today's high, look how large your risk is. How do you make that risk smaller? You let the market go back up into resistance and the pink shaded area. Secondary thing that we could watch for again is the breakdown of the orange zone, which obviously we haven't done yet. No breakdown of the orange zone. I might call it 72.90, 72.80, the bottom of that orange zone. A break underneath there. We probably look for the market to take a turn back into the mid to low 72s back at the green shaded area. And the reason I say that is just look back here. Under the orange zone, it goes to the green zone. Under the orange zone, it goes to the green zone. So again, we know that when it's under the orange zone, it tends to go down towards the green shaded area. So if we're going to go short based on some evidence of potential reversal here, the pink zone, is a possible opportunity or underneath the orange zone. Now, if you're a friend of the trend and you're thinking that's the direction that you want to go, even though the momentum's been the other direction today, you're now watching for evidence of support here at the orange zone. You really want some evidence that the buyers are coming back, and I don't think we have enough evidence for that to go long quite yet. So we got to wait to go long, but potentially watching for opportunities to go short into resistance or break underneath support. If it breaks that orange zone, then I think your risk, once it gets underneath the orange zone, your risk becomes much smaller. You can bring your stop loss down further for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.